everybody, Rachel Mikulov here from Empire Tax Professionals. Just in case if a lot of you don't know who I am Rachel Mikulov. I'm licensed by the IRS. I'm the CEO of Empire Tax Professionals, and I'm also licensed by the IRS and in 50 states. I wanted to share this really quick story and specific scenario that I had with a client of mine this week. So it was just a crazy, weird scenario, and I just wanted to share it with so many business owners out there, and you can literally learn from this specific situation. I think every single entrepreneur really needs to hear this because you need to know what you need to do in your tax situation. So again, spoke to a client this week. He comes to me and he says, Rachel, I need to file my 2019 tax returns. It's a corporation and I don't know what to do. And I said, okay, hey, I need the articles of incorporation. There's specific documentation that we need in order for us to file your corporate returns. And some of them are your incorporation documents. So if you open your corporation on your own, we need your corporation documents, we need your EIN letter, and we need your prior year returns. He tells me, Rachel, I incorporated in 2017. This is the first year that I had a profit, and I don't have the prior year returns because he never filed. So I said, okay, do you know if you're a C-Corp or an S-Corp? He said, I don't know. My attorney filed my, corporation documents, and he never advised me as to what entity I should be. Because all really attorneys do, they help you open your corporation and help you be protected, but they don't really help you make sure that you save the most money in taxes. They just say, okay, filing the paperwork and get it done, but they don't really look at the tax aspect of it. So again, I say, let's say his name is Michael. It's not, I changed his name specifically for confidentiality purposes, but let's say his name is Michael and I say, okay, Michael, I need your articles of incorporation. And he's like, I don't even know where that is. Basically, making the long story short, he was able to collect some of it, the information, and we found out that in 2017, he was an S-Corp. Now, the next question is I ask him is, how many partners do you have in that S-Corporation? He says 3. There are 3 partners in the S-Corporation in 2017. So I said, oh my God, Michael, did you know that there's a fine of $195 per partner per month, even if you had no income? He says, no, I had no idea. So now looking at, the fines, he needs to pay $7,020 per year. And the way we calculated that is $195 times 3 times 12. And that's $7,020 for 2017, even if he had no income. 2018, same thing. And 2019, now he has a profit of $180,000 and he did not pay any estimated tax payments. So I said, why didn't you pay any estimated tax payments? Tell me about the situation. He said, listen, I've been busy. I'm a business owner. I have a lot going on. And obviously, I'm an entrepreneur. I'm a business owner. I have a million tasks and I'm hiring so many, people. And there's just a lot that an entrepreneur needs to do. And I said, okay, do you have your bookkeeping up to date? He goes, no. And I said, listen, you're an S-Corp. Did you pay yourself a reasonable compensation? No, I did not. There's so many things that he was so behind on, and now I'm going to go and help him. So this is a typical situation with most entrepreneurs since they're really behind most of the time, and they don't know what the regulations are. And even if they are, they don't know what they need to do, or they don't know who they need to hire so this person can help them with everything. A lot of accountants, they focus on just bookkeeping, or they focus on payroll, or they focus on different things. What you need to make sure as an entrepreneur is hire one person who could do most of your tasks for you. So remember, now I'm going to be able to do, all of his bookkeeping and everything. So for him specifically, the action list would be, let's get 2017 done as 0. Let's get 2017, 2018, both years need to be filed as soon as possible. And then 2019, now we need to go back and do a full year's worth of bookkeeping, collect all the numbers, make sure we have, copies of the checks in every single transaction, and know how to calculate it or allocate it by the IRS code. And then we prepare the returns based on that. Now, again, guys, if he hired us in 2018, he probably would have paid, he would have paid a lot less and would avoid the $7,000 fine per year. Now, I'm not going to say, I don't know if he is going to get it because we filed so many, we've seen this in the past, but you need to know what your tax obligations are. You don't need to do it. You don't need to, prepare your returns. And by the way, he was going to prepare his returns on his own. Now, another issue is that he doesn't know if he's, I don't know 100% if he knows if he's an S-Corp. And if he does, he doesn't know from what date, because when you do the S election, you need to make sure that you know what date are you an S election from? So for example, your company could be born or incorporated starting January 1st, but the IRS could elect your S election status the following year or 2 years later. You need to, this is specific, detailed information that you need to know. And only an accountant is able to really guide you and ask you specific questions to help you be on track. Don't try to learn this on your own because it's really impossible for you to learn everything. I always recommend hiring one person that could help you get most of your tasks done. So for example, I have I would say 100 tasks that I need to get done. I would prefer to get 3 people, or 3.5 or whatever, to do 30 tasks. Or, I don't like hiring one person to do, let's say, payroll, and one person to do sales tax, another person to do corporate tax, because when you do that, there will be a miscommunication. Accountants, and they don't really communicate a lot, together, because if they do, then things get behind and a lot of things get lost in communication. And guess who really suffers? The client really suffers. And I highly recommend hiring just one person to do it all. So with his specific situation, again, we're going to help him file 17 and 18, get his bookkeeping up to date for all of 2019, and then get him all caught up for 2020. And moving forward, he's going to hire us for monthly CFO services so we can help him with, getting his payroll up to date, getting his bookkeeping so he knows his numbers on a monthly basis. And he is completely stressed out about this right now. He doesn't, he's like, and now he has to pay a lot of money to get everything caught up, and it's going to take time. It does not take one day. We have another client right now who has a $30,000 tax bill. Why would he have a $30,000 tax bill? Again, he had a bookkeeper all year round, but did his bookkeeper translate his numbers to him? Did he look at his numbers? No, he didn't. He wasn't able to see his numbers. He didn't understand, how his numbers translate into what specific decisions he needs to be doing based on those numbers. So when we do the bookkeeping, we look at a client's profit and loss report and we see, okay, your gross income is $20,000, right? Your net is $10,000. Now we're looking at the entire situation and we say, how much estimated tax payments do you need to pay this quarter? What reasonable compensation do you need to be paying? Because all S-Corp owners, all officers of a corporation need to be on payroll, and you don't want to overpay. I remember I had a magician who had a net of $10,000 and he did his bookkeeping himself. He hired a payroll service provider to do the payroll for him, and he said, I have a net of $10,000. That means in his mind that he needed to cut himself a check every single month for $10,000. And that is 100% wrong. Okay. He overpaid in taxes by several thousands of dollars because his payroll was wrong. And I said, why did you come up with the $10,000 net? Why did you assume that all of it was payroll? He said, I called the payroll company. They told me, what's your net? And they asked me what I want to pay myself in payroll. I said $10,000, and that's it. A year later, he overpaid. He met me and I said, you overpaid in taxes. Why? Because when you're the owner of a corporation, you are the owner and you are the employee. As an owner, you're able to take distribution out of the corporation, and that's being taxed at a lower tax rate. When you're on payroll, when you're an employee in the company, then you're paying yourself more taxes. And in that situation, he overpaid in taxes by at least 15.3% because he took the entire amount. You're supposed to break down the $10,000 into officer's compensation, which is payroll, and then distribution, because you're also the owner. You're not just the employee of the company, right? And you obviously do other things. When you're working on your business, you're the officer. When you're working in the business, you're the employee, and there's different tax rates. So you have to be really careful how you allocate your income And it should be with specific advice, because reasonable compensation must be paid when you're an S-Corp, and it has to be reasonable, and nobody knows what's reasonable. An accountant would be able to review the tax regulation and let you know and ask you specific questions such as, what degree do you have? How many hours do you work in the business? How many other employees do you have? What is your level of expertise? And determine the proper reasonable compensation for you specifically, and then have a backup of how you calculated that and then issue payroll based on that. You can't just come up with numbers just like that, because if you do, you may overpay and you may underpay. And if you underpay, you have a high risk of getting audited. And then what happens is the IRS, says, let's say you were supposed to pay yourself $60,000 a year and you paid yourself 20 or 30, whatever it is. The IRS will assume, oh, your payroll should really be 70 or 80. Now let's amend those payroll returns, go ahead and pay the payroll taxes, penalties, and interest. And we've seen it happen with other, stories from other accountants. And it's just not the best idea. It's always best for you to have a perfect scenario would be you would do your bookkeeping, an accountant, and this is what we do. We review your monthly financials. We let you know exactly how much your payroll should be, what your distribution should be, what your, any additional things that you need to do regarding your expenses. Are your expenses too high? Is your, ATM withdrawals or your meals too high? We go over the financial statements with you, and then we go over the net estimated tax payments. How much do you need to pay in estimated tax payments based on these specific numbers, not based on last year's? I mean, last year we do calculate and we do look at last year's, but we don't determine your estimated tax payments of today based on last year, especially during COVID, because you may make $5 million last year and this year you only made $1 million, or you may make $100,000 last year and this year you made 50. So it does not make sense for us to calculate, or for any accountant to calculate your estimated tax payments based on last year and not looking at this year's numbers. You need to look at the entire picture. Do you know how many clients come to me and they say their accountants calculated, they only look at last year's numbers and they don't even know this year's numbers. So they're calculating their estimated taxes blindly and they're overpaying because they're only looking at last year's. I see this consistently. And it's a major problem. Accountants, they don't do bookkeeping most of the time, and they don't know this year's numbers. They just estimate, and you may really be overpaying. And instead of you overpaying, it's always best for you to reinvest that money into hiring a marketing manager or hiring a virtual assistant so they can work for you, or even a salesperson so they can make more money for you versus just giving money to the IRS. Also, another reason that we see is you don't want to just calculate your estimated tax payments, because you want to make your estimated tax payments based on this year. And the only way that you could do that is if you know your bookkeeping numbers, if they're accurate. So as an entrepreneur, if you're making at least $10,000 to $15,000 on a monthly basis in gross, at least $10,000 or even $5,000, if you're really growing really fast, you really need to have your monthly books, reconciled. You can't make any decisions without knowing your numbers. And once you know your numbers, the first thing you do is you calculate your payroll, and it must be accurate by looking at how many hours you're working, exactly what you're doing. Then you want to know how much is the distribution, how much should you be paying yourself, and it must be, the right way and the right amount. The third thing is, what are your estimated tax payments? Now, estimated tax payments must be paid every single quarter. And that is April 15, June 15, September 15th, and January 15th. 4 quarters, and it must be paid on time. It can't be paid, whenever you want, because then the IRS will consider it to be late, and they will make you pay penalties on late estimated tax payments. So you want to make sure that you're making estimated tax payments, because number one, nobody wants a huge tax bill at the end of the year. We're getting really close to the end of the year. And again, the client that owed $30,000 or $40,000 in taxes is, it's going to be a shock for him. If he has $100K in his account right now, and now he has to just pay $40,000 to the IRS, he's going to wake up every morning only having $60,000. And sometimes it's a psychological, it hurts psychologically. You would rather make that payment of $10,000 every single quarter versus 40K at the end of the year or 30K at the end of the year. And you want to make accurate estimated tax payments. You don't want to just estimate it, oh, I made approximately $30,000. This is how much I need to pay. This is why you need to know your bookkeeping, and it has to be accurate. Now, the other issue we're seeing is a lot of people, they do their bookkeeping themselves and they're not deducting everything, or they're deducting a lot of their personal expenses. And because they're deducting a lot of their personal expenses, their net income is lower than it really should be when you file your return. Because on the return, you can't deduct personal expenses. So let's say, we had a client who tried to deduct her medical expenses and other, daycare expenses and other expenses on the, corporate tax return. And when you do deduct that, the net is lower. But on the corporate return, there's nowhere on the line for you to deduct daycare expenses or your personal living expenses. Now on the return, your income is going to be higher. And because of that, you're going to have a higher tax liability that you did not expect. And a lot of bookkeepers, like data entry people that say they're bookkeepers, like VAs, what they're really doing is they're just data entry. They're not reconciling bank statements and credit card statements into QuickBooks. They're not looking at every single transaction and making sure that you're doing everything you can to deduct every single expense. They're not doing that. What they're doing is they're just saying, okay, T-Mobile is one expense, and they're doing data entry. There's no advice that they're giving you. So, they're not really giving you exact advice. And I've seen a lot of people who hired a receptionist to do their bookkeeping overpay in taxes. I've seen people come to us who did their bookkeeping themselves and they overpaid in taxes. So if you don't want to overpay in taxes, it is always best for you to hire an accountant who understands the tax law and who offers bookkeeping services, which is what we do. And the reason we offer bookkeeping services is because we want to make sure that our clients really pay the lowest amount of taxes legally. And in order for you to do that, again, you need your bookkeeping up to date. You need to make sure, and you also want to be compliant. You want to make sure that your payroll is paid. If you have sales tax, you're filing sales tax in the appropriate states. You're filing your corporate returns, and you're filing your back taxes. The IRS is not just, deciding in one day that they're going to withdraw or withhold or put a lien on your account. You don't want that. You really want to make sure that you are compliant. And as entrepreneurs, and I am an entrepreneur, I am extremely, extremely busy, and I have a team of about 25 people. What you want to do as entrepreneurs is know what you need to do and hire the right person to help you do the most for you and pay a reasonable fee so you could just delegate it all out. What we do is we do your bookkeeping every single month. We process your payroll for you. We process sales tax. We do your estimated tax payments every single quarter. We file your corporate returns. We file your individual returns. We also do your back taxes if you need to. And then every single month you get your bookkeeping reports. Plus, the most important thing is we do your tax planning. So that's where I want to come in right now, because tax planning is one of the most important things that a lot of CPAs and accountants don't do. I'm a CTC, I'm a certified tax coach, which means that I have the right experience in order for me to help our clients with tax planning. And you need to know your bookkeeping numbers in order for you to do tax planning. If you don't have your bookkeeping numbers and another accountant says, oh, we could do a tax plan for you, but they don't even know your bookkeeping numbers, and they're just giving you random basic numbers. They're not giving you specific numbers and a specific tax plan for your specific situation. You want to have your bookkeeping so they could tell you, okay, now that year to date, your income is, let's say, a net of $50,000 or a net of $100,000. Now we know what we need to do because we know your income level and what specific strategies will, match you based on your specific situation, based on, if you own a home or are you renting, or how many properties do you have, or how many children do you have. There's so many things that, we look at the entire picture, and we look at your net income to see what specific tax strategies will help you reduce your liability legally. So again, if you need help with bookkeeping, let us know. That is the first step in order for us to help you with tax planning. Tax planning must be done right now. It really must be done right now. And if it's not done right now, then again, I've seen a lot of people come to us in February when tax returns need to be filed, and they're like, shoot, I don't have my bookkeeping, and they're going to end up overpaying in taxes because you can't go back and make a transaction that should have been made in October, that should have been made in November or December. Specific transactions must be done now until December 31st in order for you to take advantage of the tax planning strategies. And even have a conversation if you want to take any action on the tax planning strategies, but you need to think about it. You need to see if this is what you want to do. If you're not even thinking about it, then most likely you're overpaying in taxes. And if you could take back $20,000, $30,000, $40,000 and reinvest it into your business, or hired a sales director, or hired a marketing director, or even put that into your marketing budget, put it into Facebook ads so you're able to get more money, more sales, then wouldn't that make more sense? Because every single entrepreneur wants a higher ROI on their money, and you're losing money when you're just throwing it to the IRS. You're really losing money. So you want to do things legally, but the first thing is you want to make sure that your bookkeeping is done right. I can't begin to tell you how many times we see that the bookkeeping is done wrong, and when the bookkeeping is done wrong, everything will be wrong. Everything. Bookkeeping, payroll is wrong because you're determining the payroll based on the bookkeeping, right? Your sales tax is wrong. Your corporate returns are wrong because the numbers are wrong. Your tax planning strategies because the net is wrong. And, everything is wrong, everything. And you don't want to do that. The bookkeeping is one of the most important aspects, and I really highly recommend for you not to give it over to a VA. It has to be done by an experienced accountant because they need to understand how specific expenses must be allocated correctly, and we're able to just help you with whatever you need. So if you have any questions, let me know what your questions are. Reach out to us. We have monthly CFO services. We do everything from A to Z. We're a full service accounting firm, and we're just available to help you. Good luck, guys. Thank you for watching. Bye.